The U.S. is now engaged in a engagement with, let me do that again. The U.S. is now engaged in a conflict with Iran, and now the question is, do you buy the panic in the markets of what is happening? Today we'll break it down for you, get into all of that. One thing you guys should do, though, is get over to BTCC. This is where you can actually do some crypto trading, very easy to set up. No KYC right now for the United States people that are out there reviewing this, but you can get a 10% bonus on your first time deposit. Very simple. You can also do some copy trading over there, long shorts, all sorts of advantages that you guys can use, including a bit of a discount on trading fees. All of that just by using our link. So check that out. We'll leave a link down below for you guys to get started. A lot of things happening, of course, over the weekend with the Iranian attack. And now you, of course, seen the market respond. Just in the last 60 minutes, this, of course, is what we saw this morning. Bitcoin was up, ETH was up, BNB was up, XRP was up. Pretty much the entire market up in green, where we started to see market flows in a heavy way. And, of course, if you look at what Mohammed was saying coming in from CNBC, a classic initial market reaction to this weekend's eruption of military conflict in the Middle East. Oil has surged 10%. We saw that. The dollar has strengthened, and now Dow futures have opened down some 500 points. So people may be flighting to some assets that are the safe assets. People would say, well, that might be Bitcoin, might be gold, might be oil, might be energy stocks in general. Where are you guys going? If you look at the market, we put out a poll this morning early. The first thing, though, was that in the early hours, this was at like almost 80%, is that we'd see the market crash because of the risk considerations. But here recently, that has stabled off, and pump now with gold and oil is in line. And if you look at the gold chart, you can kind of see what I'm talking about, over 5,200 as we're reporting. And of course, oil continues to fly. I'll show you a chart on oil in a second. Big week ahead, though, right now for crypto holders. We've got the March 2nd U.S. market open for, obviously, for what's going on right now with ISM manufacturing and PMI, which was down, or up, I should say, which means good for the economy. 3rd March, we'll have the ADP non-farm data. Jobs reports will come in. This will be a very important report, because if this one comes in as soft as I think many people and analysts are concerned with, this could be a big deal. Could be a damper for the week. And then the 5th, we'll see initial jobless claims, which I think is going to be much greater than people anticipate. If you followed and have been watching the amount of tech firms that are doing layoffs, pretty significant and large enough. And even I think Jack Dorsey was on laying off 4,000 people and he was straight truthful with everybody, saying, hey, the AI automation is charging this, and we're going to continue to lean in. The 6th, we'll see non-farm payrolls and the unemployment data jump in, and that will be the final blow that we will get coming in prior to the ADP data that will be coming in. And most of those, sometimes they don't necessarily align, so it's very key that these employment numbers come in accurate. Hopefully we'll get some that really make a difference in understanding. Here, of course, is gold futures officially rising another up to 5,400 an ounce. All this is, again, with people flying to safety, looking at what's happening right now. Nobody really knows whether or not this is going to be a long-term engagement with Iran, or if this is going to be a short-term engagement. This is a much different angle that President Trump is having to deal with, and it's the largest country we've engaged with yet, at least of recent. So this could play out in a very bad way, so be ready for that. Foreign central banks, though, continue to pack on the gold as they continue to now surge past dollars holding and being held of U.S. Treasuries. So first time in 30 years that this has happened. We reported on this a couple of weeks ago because it did cross over about 2 weeks ago. And the real question was, would it hold on? It appears, if you zoom in on that, it's not just holding on. This thing is flying past that. So gold continues to be one of the key assets. The world market right now, you look at UK gas up 23. This is LNG. Reason for that, one of the biggest suppliers of liquid natural gas. We see in the Middle East, crude oil up 8%, slightly up on the market, but definitely over the last couple of months. I'll show you a Brent crude chart here in a bit. Gasoline up 4, gold up 2, silver up 2, Bitcoin was flat, now up considerable since this report was done. So Things are starting to move around in the market. President Trump says the conflict in Iran could last 4 weeks. This is Daily Mail. However, if you look at the poly market, this is very fluid. We are now seeing this could go as late as June 30th. And if this thing goes into midterms, this would be very bad, I think, for the administration. I think they're going to do everything they can to get this thing done. For whatever reason, if this extends, this could be a very messy situation right now. Let me go to a clip real quick. This is Tapper from CNN talking about the president responding to what's happening in the Middle East, saying that the big wave has not even hit yet. Take a look.
But right now we want everyone staying inside. It's not safe out there. And then the president said it's about to get even less safe. He said, quote, "We haven't even started hitting them hard. The big wave hasn't even happened. The big one is coming soon."
So whether you listen to what Trump said and you kind of say, all right, this is the angle I'm going to take, I'm going to go energy and I'm going to go safe assets, whether that's gold, oil, energy, whatever it might be, or do you look at possibly taking the counterplay and going after a risk asset once this is stopped? Do we get a bounce on much of these risk assets going forward? Let me know in the comments how you guys are playing this right now, especially if we actually haven't entered into the real conflict yet, if Trump and his statements are not overzealous, but are actually telling us what we're going to about see. That is the question going forward. A couple of points I want to hit on right here. This is Anthony Scaramucci, and he's talking about that this is not necessarily an economic boycott. It is a capital boycott. Take a look.
I'm worried about the market because Mr. Buffett took $400 billion out of the market when he looks at certain levels of valuation metrics that he looks at. And I'm worried about the market because Trump single-handedly is taking the marginal dollar that used to flow into America's safe and secure markets and liquid markets where rule of law was predictable. And people now want to punish America. You talk about a boycott, an economic boycott. I'm talking about a capital boycott. The sovereign wealth fund of Norway. It's like, okay, let me put my incremental dollar into America right now. I'm telling you, they're not. They're like, hey, F you guys, find other places to go with the money. And look at the tourism numbers are down. Look at the flights from Europe. Look at the flights from Canada into Florida.
Tourism is a bigger industry than manufacturing, everybody.
Exactly. So to me, what I'm worried about is the knock-on effects of Donald Trump. I think the tech guys are going to be okay probably for the next 12 months because of where rates are going. Unless you're telling me Rick Rieder's getting the job and he turns to you and says something that a traditional Fed chairman would say, which is, hey, I'm probably raising rates 50 basis points. Wait, what? Well, gold's at 5,000. The dollar is falling. The yen carry trade is fakakta. And I'm going to raise rates here to put the thing back in equipoise. So the market is not sensing that.
Market not sensing. Okay, I agree with some of the things that Anthony was talking about, and that is that whether it's, I don't know that it's capital flight yet. I'm not sure where, because when it boils down to it, I think investors try to find the best place for capital to go and work, right? You do that, I do that. A lot of times you have blinders on to many of the things that are around that. Most of the time, not always, but most of the time. And I think he is right. There's probably now questions being asked. Should we put our money in U.S. stocks? Should we put our money into some of these funds? Should we go into U.S. treasuries or flip into gold? We just showed you the chart on that. Now, what Kara was talking about there about tourism, I kind of did a fact check here. Manufacturing right now is significantly larger than tourism in terms of total economic output. But tourism, leisure and hospitality, employs more people. I know that if you look at the restaurant industry alone, you're talking about 15 to 20 million people. That's restaurant and hospitality. So if they're impacted in a big way, that could be a problem because it has more rippling effects in the economic side of things. I wouldn't say that it has more on the capital side of things, but definitely more on the economic side of things. So that's a good example of it right there. Annual GDP, 2.9 trillion on manufacturing, 2.3 to 2.9 on leisure and hospitality. Share of U.S. around 10 to 8 versus, but here's the key, 12.8 million there, back to my point, 17 million right now. So either one of these, now if we're growing in manufacturing, okay, I get that. I know that's Trump's kind of big play here. But if we're losing hospitality and tourism jobs, that's a big problem going forward. So not a good look here. So if you look at what Business Insider was reporting on, and this backs up what Anthony's talking about, is that there is travel that is starting to reduce here. So the Canadians have reduced, Australians have reduced, but respectively right now it's around 3% fewer trips in the US coming in. If that goes into double digit, that will have significant impact, hotel, restaurant, conventions, all of the things, and the surrounding businesses that support that, but there's so many. So be on the lookout of this. This could get bad quickly. And I think Scaramucci is right. We're not there yet, but some of the things that have to stabilize here in the US for us to get there are up now. Let's go into another clip that shows where the market could be going. And Tom Lee comes in and talks about March. Does he think it's going up or does he think it's going down? Take a look.
In past incidents like this, and every single time it's happened, we've always said, well, in past incidents, it never lasts that long.
That's right. I mean, nobody likes to see headlines and the images of explosions and war, but it's not really going to change the fundamentals of the U.S. So in the past, markets kind of sell off into the buildup, and then they tend to do better once the battle begins. And I think this is going to be similar. I think the worst of the sell-off is going to happen this week. And, you know, I would expect actually March to be an up month for the stock market. But
Comes in like a bear, goes out like a bull.
yeah.
Yeah.
Yeah, it probably comes in with the better weather. But, you know, the things like software, the Mag 7, and the crypto all had early weakness. They're all probably in the final stages or have already bottomed. And I think that helps lead us up to an up April.
Have you woken up in the middle of the night and looked at where Ethereum is and said, I can't go back to sleep?
I don't know if he can go back to sleep, but he decided to go. If he did wake up, he went out and bought more ETH. So I think he's doing just fine with this of where he thinks it's going. But he said the key word there that I think everybody probably caught, and that was the word probably. Probably goes up. So if he is not that confident, and you've got, I mean, these guys are as good as it gets on Wall Street of understanding where the money is going, capital flow, capital in, capital out kind of situation. And if Tom Lee is not fully on board that March is an up month, I'm still kind of curious. S&P 500 never lost a war. If you look at the markets are up after that. Here's all the different conflicts that have taken space and where the S&P goes. Everything has been up and to the right. So there you go, guys, if you're just playing the war card. Now, Arthur Hayes came in and said, we think that the Middle East conflict is actually going to boost crypto. And many of that is really coming into the point, he says, that was the problem we saw for a while, which was where we were seeing crypto support really break down. This could change things if risk assets start to get a little bit of a movement overall. Bitcoin tends to outperform traditional assets like gold and stocks during geopolitical shocks per BlackRock. This is coming in. I don't know if it's going to continue to perform around gold like gold has been performing, but if it does get a run, then yes, it could outpace gold. But the question will be, what does that look like if things do get worse in the Middle East? So watch that very closely. Let me know what you guys, would you buy Bitcoin or would you buy gold if things get worse in Iran with the United States? Just drop Bitcoin or go BTC or gold down in the comments. I want you to take a look at this right here because Bitcoin logged its 5th red month. It's going for its 6th. Last time we saw 6 was in 2018-19. And we did see a reversal, though, which was maybe what Arthur Hayes is talking about, that we could see that kind of run up, which was a 316% return over the following 5 months. So nice moves if that is, in fact, the bottom of where we're looking at the charts right now, as crypto hovers right around 68K on Bitcoin at time of recording. Odds now that the Fed is not cutting rates, though, have surged for March up to 95.7%. Likelihood no rate cut continues. However, that could change quickly if we start to see more pressure in the Middle East. Does the Fed end up getting into a position where they have to push and actually do a rate cut? Oil price, though, does not oil prices do not bode well for rate cuts. You look at this right here, according to the Fed, every $10 increase in oil prices leads to about a 0.2 in inflation. And I'll show you a chart right now that doesn't make sense. This is the 23 chart from the Fed report, which should kind of put this into context in terms of Brent crude and where the headline CPI was going. So just understand, kind of correlates right there. Here was a good example of this. I want to show you Anthony Pompliano. He's hitting into the topic of Trueflation, saying that inflation is down. Guys, I used to believe that this was the accurate barometer for inflation. I'm not really on this one as much anymore. I think this one is as bad as the data we get out of DC because of what they recently, Trueflation, announced to us about what they weren't tracking. And some of the things they weren't tracking were key to the economic status of Americans. So I don't know that we can actually seriously say that we're seeing this kind of erratic behavior when right now we know that oil has been going up. Here is the Brent crude. I'm just going to go back here to the bottom, which was $60 a barrel. That was on, what was that? Yeah, look at that right there. That was January. Then it moves up right here into February. We're still hovering around 60 to 70, spiked in the $70 range, stabilized, and then here has recently started to spike again into the $80 range right now. That's Brent crude, which pretty much dictates energy prices of what we'll see. And this, of course, is at the pump for you guys. One of the biggest categories of inflation that is tracked out there is gas prices. So it doesn't really make sense if we're seeing this kind of spike over the last 3 months and us seeing inflation going down. Am I missing something here? Are there areas where you guys see prices getting stabilized? I mean, if there are, let me know in the comments. I'd love to get a full understanding of this because I don't see it. One thing that's happening, though, is household debt is now exploding into delinquency. This is not a good sign as we continue to see this moving up right here. That is the problem right now. Severe derogatory credit hits happening right now in 2025 and 2026. Explosion, that big green line right there. Not a good look overall. The 120 days late also exploding. I don't know, guys. Maybe this is the bottom, or are we penting up some demand here that could move these markets, or is there a lengthier bear market that continues? Let me know in the comments if you think that's the case. It's going to be a busy week. Get ready. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.